and thank you, Stan, for inviting me to participate in the launching of Positive Money Europe, and thank you all for being here. I am going to talk today about secure money and banking liberalization. Well, secure money, that is, after the crisis, were two reactions, and in front of the catastrophe of the banking crisis, the majority of people, majority of officials try to improve the current system, the system where the private banks create money. But very few people, and especially positive money, people around full reserve banking, Folgel, many ideas try to change the system and change the system from a system that where the banking, the private banks create money, to the creation is made by the state, by the agency or so on. It's very, very interesting, and most of the ideas about secure money has been focused on money, on the advantages of having a secure money instead of the fragile money that we have now, because the money created by the bank is by nature fragile, because, well, the money is not deposited, then it's not there, and then you could have problems of liquidity, problems of solvency, and you have, at the end, banking crisis, no? But, and there then the importance of the stability advantages of having a system of secure money has been developed by Positive Money and others, no? Kumhoff, Prescott, Cochrane, many people, no? But the other thing that changed, if you change the system to a system where the state create the money, well, that is a similar situation like we had in 19th century when banks printed private money, private banknotes, and was decided that the Bank of England and the other central banks should have the monopoly, and in this case it's the same. I mean, that digital money will be monopolized by the state, and then it's very similar to what was done in 19th century, but now with digital money, no? But what I am going to focus today is in banking, because at the same time that money is changing, banking is changing. And what are the benefits of the change in banking? Well, the benefits are that you have the possibility to take out all the hyper-regulation that have the banking. Banking, we will see, is the most regulated, intervened, protected, and privileged sector of the economy. The state is continuously providing protection, privileges, and so on and so on. And then that's the problem that have is that the market is not working, and then you suffer from efficiency. Then what I want to stress today is that we will have, with a radical change, not just stability, regulation, and macroprudential will not be so necessary because you don't have the accumulation of debt and so on, but also efficiency. Then, and that's why is what the vision is going to be the vision of a liberalization, of a structural reform. During the last decades, we have made a lot of liberalization and structural reforms in, okay, thank you. In many sectors, international trade, China went to market, telecoms, air transportation, labor market. The Nordic country did a profound structural reform, and they got many benefits from more secure jobs and more less unemployment, and so on and so on. All these structural reforms that are called structural reform because there is not only liberalization, because you have to re-regulate at the same time to maintain certain protection to the people, have these components. You have new technologies that allow to liberalize in telecoms, in many other sectors. Liberalization eliminates subsidies, privileges, protection, monopolies, entry barriers, and so on. Unbundling, that is something that is very important. In this case, you unbundle the banking, because now in our system, money and banking are completely linked, and with a radical reform, the money is created by the state and the banking, I mean, lending, payments, all the services that bank provides to the society are separated, and you could liberalize that. You could liberalize very important services that now are being provided by banks, lending especially to small and medium enterprises and payment services, no? Because money, that is the third important characteristic of banks today, is separated and will be provided by the state. Well, here we have, it's very long, but it's probably, if you have to keep one slide of my presentation, this is probably the most interesting, because it's a list of all the hyper-regulation that we have now in banking. You have, well, the first one is important, is the big prohibition. There is a prohibition that citizens cannot deposit, have deposit in the central bank. Banks have the current accounts in the central bank, but citizens are not allowed to have. That is very important, because in the moment you have the possibility to have deposit in the central bank, things change radically, because you have safe money instead of fragile money. In addition to that, banks have two big blocks of regulation, very big blocks. One is the protectionist block of regulation, that is how you protect banks. That is deposit insurance. You guarantee by the state a low-cost financing, lending of last resort, you have liquidity, and of course, even if there are many promises that this time, but not never, we will never do the same, you save the banks, and you inject capital, public capital, in the banks. That is really, there is no other sector in the economy that have this kind of protection, because it's really very, very important. But at the same time, you have other block that is the intervention, because as you are protecting the banks are trying to risk their money and have a more fragile money. And then you need to put in place what we call prudential regulation. That is what we have done in the Financial Stability Board. I was there, and we did Basel III and so on and so on. This is an incredible amount of regulation that no other sector, not just other sector in the economy, no other sector in the financial sector has this kind of incredible regulation, where we say the capital they should have, the liquidity they have to maintain, how they have to remunerate the executives, many things. I read the other day that the Bible has 700,000 words. Well, what we did with Basel III, with all the developments, have 2 million words. Just that. I mean, then is how much? Well, around 4 Bibles. No, you have to read if you want to know what are the regulations we have. But in addition to that, competition law that is applied to many sectors is not applied to banking, because stability is the first priority, and then you are accepting increasing concentration and so on, and then the banks have a waiver that is not written, but it's a waiver, and so on. And you have also 2 big state bodies, supervisors and central banks, that are very worried with the profitability of the banks, with the profit and loss accounts and so on, because if you don't have profits and the profitability of banks decay, you could have a crisis, and this is a catastrophe. Then that's why you have an enormous army of supervisors and central bankers trying to avoid this. Well, then if we have so many hyper-regulation, why the banking sector has not been liberalized yet? It's incredible, because there is no other sector, no telecoms, no transportation, no other sector have this forest of hyper-regulation. And why has not liberalized? I mean, we central bankers spoke in our speech, well, all countries have to do structural reform in the labor market and so on, but we never said, well, we have to do a structural reform of banking. Why? Because banking now, with fragile money, you need this hyper-regulation. is unavoidable. Because if you maintain a fragile money, you need that. I mean, that is not something that you could forget. You need that hyper-regulation. Because money created by banks is fragile. It's not like the money created by the state. And then money would not exist without protection. Nobody put the money in the banks, in the private banks, if you don't have deposit insurance, if you don't know that they are going to be helped with liquidity, and so on and so on. I mean, it wouldn't exist. It's not a question so. And of course, frequent and severe crises would arise without prudential regulation. Well, an example was the deregulation that was made before the Great Crisis, that in the part that affected to banks, you deregulate the banks and you had many problems, because we had many problems, or the problems that we could have if the intentions of Trump administration to reduce the requirements of Basel III and don't go ahead. I mean, that's why it's very important, no? But secure money, not fragile money, is possible today. We have the possibility to have safe money. And there you have all the conditions to have a structural reform. That is new technologies that are incredible. Well, in fact, safe money in the central bank is possible thanks to the computation and storing technologies that, well, in the 30s, when this idea emerged, Fisher and others, Simons proposed to Roosevelt to use the state, that was not possible. The Federal Reserve would have need 200,000 people taking analogic registers to realize. But now, if the Bank of England, I don't know how much, but they would have 9,000 current accounts from banks. To have 70 million accounts is the same from the point of view of cost of computation. Then you could have perfectly now. You have the new technologies there, and you have the new technologies also in the lending and payments services, new technologies, fintech, that before we didn't have that. But now all the techniques, peer-to-peer, that are entering in many sectors, in car, in transportation, in booking, Trivago, and so on, and many things. They are not entering in the banking because you are not liberalizing the banks. And then it has some bundling. The great idea of sovereign money and other proposal like this is that money is separate from banking. Money now in the new system is safe, it's public, it's state-created. Banking, one part of banking that is the most important, because on payments we are seeing a certain competition, that is lending, and lending to a small and medium enterprise and household, because, well, in the United States and in Spain, well, 80% of the financing of Telefónica or another company is provided by the market, not by the banking. Well, then the banking structural reform being deregulation and also re-regulation, because you can fortify other regulation on supervisors. You take out all the prohibitions, all the protection, all the prudential regulation, of course, not during the transition period, but at the end of the period, but you have the resources to re-regulate and have more market regulation, more competition law enforcement, more uses and investment protection. That, of course, is needed when you have a market. You gain efficiency, but you have to be sure that that efficiency is absorbed by the citizens. Well, and the benefits are not different from the benefits of all structural reform. That will be innovation, new services. Well, you remember the Volcker joke that said during the last 50 years, the only innovation in banks was the ATM. It was not. And that was not right and correct from the financial system. The financial system was liberalized and did a lot of innovation that were very good, extraordinary, the creation of hedge fund, the creation of many, many things, derivatives and so on. When you have, because the rest of the financial system is fully liberalized. I mean, it's not with this enormous belts that we cover. Well, and it will be similar in other liberalization. What we have seen in air transportation, more services, reducing of price and so on. When you introduce market, you know that you gain efficiency, and it's what we are going to gain. Well, not much more. I finish with saying, with one idea, because as we have stressed, and Positive Money and others, about the advantages of save money public, there are many people that see this reform as the security money reform is a policy that increases the power of the state, and it's not true. I mean, it's not true. You are introducing more market in lending and so on, in the banking, because we have now a system that is completely intermingled with many state intervention, and at the same time, the power of central banks is reduced, because the central banks, or the successor, probably the name we have to change, is only a register and an important task that is monetary policy to create. But they don't have the power they have today, and that's the reason why, well, you have after a panel, no, well, the central bank should be more legitimate and so on, because they have an enormous power, and that is this. Then this is thermal. Then what is, and I close. What is the in all the structural reforms? Is more market? Is state? No. Is the correct allocation of market and state roles. A market works well with risk, with private, and so on, and a state works well with safety, and so on, And then you assign to the state the idea of safety, and you assign and introduce and bring the banks to the market. Thank you very much. Well, it is starting. When I discovered these ideas, because what I did in the Financial Stability Board and during my time in governor was not this kind of ideas, was try to reduce the dangerous, that is the danger, the current system, no? And increase regulation and so on. But in the last, I would say, 6-7 months, the things are changing. Why? Probably Bitcoin, that I don't think is going to be a money, and I agree with all central bankers, because they don't have the well, and it's like a new gold pattern, I mean. But has the effect to attract the attention that other money is possible. And I don't think. And also that is important is that many central banks have started to study. What they have done, because central banks are conservative, fortunately, because if not, if we have a dangerous system and we don't have conservative central bankers, that would be terrible. No? But they have started to study, I mean, Bank of Sweden, Bank of Canada, Bank of England. I don't think the ECB has started to do that, but some banks, and they have started, and a very interesting report made by the BIS of many experts, and they produced a report at the beginning of this year about central bank digital currencies. But what happened, that they have started with limited purpose of central banking digital money. Then they are starting to think in that we are going to produce digital money, but only like substitution of cash. Or what would be worse, to help the banks to have a good system of settlement and so on. But when some of them have seen the consequences that central banks create digital money, well, it's a revolution. I mean, it's a revolution. It's really a structural reform that changed completely banking. You introduce competition in a system. And the other thing that many old colleagues are telling, and I think they are right, is that if you don't have a transition design that is good, and when I see a transition in a structural reform, a transition, for instance, when you reduce tariffs or quotas in international trade, always the GATT, now is the OMT or something like that, I don't know how it's called, but the GATT apply calendars, 20 years of reduction. Because if you have calendars, all the countries that have to adapt to market, all the enterprises and so on, have time to adapt to market. And then if you tomorrow start with a central bank digital digital currency, bank collapse. Then that is very important to see and further research to see how is going to be the transition, to give time to the banks to adapt. It is important that they enter in the market and acting in the market and so on, and without the protection of the state. But you cannot do that tomorrow. If tomorrow you take out the deposit insurance and so on, well, the banks don't live just more than 1 day. And then you need to give time. And in my view, there are some ideas. One of a person that was in Positive Money, Ben Dyson, no, about the transition. But I think that, well, when the BIS report finished the report, he says a sentence that is, I think, very, very interesting at the same. When they talk about this, about central bank digital currency, no with limited purpose, but total reform, say, well, this is a very important question that we should treat very carefully and thoroughly, and we need further research. Because
always a good way to end a paper, further research. Thank you, Miguel.